What if that passive income real estate platform that you're eyeing is setting you up for disappointment, or worse, losses that you didn't see coming? I tested both Arrived Homes and Fundrise with real money, and what I uncovered might save you from a 5-figure mistake. Stick around, because by the end of this video, you'll know which one fits your goals best, and which one to avoid. Alright, well, let me start with this. I've used both, but before I ever tested either of their features, I wanted to know what other landlords were actually saying about these platforms after putting real money into them, because honestly, their websites look pretty polished, and for anyone's guess, they could both be amazing. But real user reviews, that's where the truth usually shows up. So I did what any skeptical investor would do. I started with the 1-star reviews. That's usually where any of the red flags live. If there's going to be any problems, that's where they'll be. And with Arrived Homes, I came across a user who was frustrated after making an account, only to find out that Arrived isn't available in the UK. He said he couldn't even find a delete button for his account though. Now, that's a bit annoying, I get it, but here's the thing. Arrived never claimed to support international investors. They're currently US only. Alright. But their team actually responded, saying to email support if you want your account deleted, and they apologized. So yeah, it's frustrating, but this kind of thing isn't shady, and that sort of a location limitation isn't unusual for platforms dealing with United States real estate compliance either. That review stood out, but I only found a handful like it. Most of the other reviews I saw, a completely different tone. Quite the flip side, actually. So here, one investor said that he started small, but now owns shares in 35 homes across the US, and the platform helped him earn passive income without managing anything. He called the whole process easy and highly recommended it. Another review that caught my eye was from a user who said they loved how clear everything felt. No hidden fees, no messy jargon, just an easy way to browse equity and debt deals. They were excited to keep reinvesting because everything from support to the platform interface just worked for them. Now, when I looked into Fundrise, there's a review that had me raising my eyebrows, so here's what it is. This user warned that unless you're ready to let Fundrise hold your money for 50 plus years, you might not see much return. He said it sounds stable and professional, but questioned the long-term liquidity. And I think that's a fair concern, but here's where I think context matters. Fundrise does advertise that it is a long-term investment tool. They're upfront about exit windows and timelines. If you invest with some of those short-term expectations and you want it out really quickly, yeah, that can be kind of disappointing. Well, that being said, I did also read dozens of reviews where people praised Fundrise for doing exactly what it promised. One user wrote that Fundrise earned their full trust, which they don't give out easily. They liked the transparency, and they felt confident because they could see exactly where their money was going. That kind of confidence, that's not something you see unless a platform actually delivers what the clients want. Another landlord mentioned the app being perhaps a little tricky to navigate at times, especially when choosing to find specific funds, but he went further to acknowledge that the overall experience itself was pretty smooth, and he appreciated how detailed the disclosures were. So, some ups and downs. What's my takeaway from all this, though, is from the Fundrise versus Arrived Homes reviews, it's actually pretty simple. Every platform has its critics, but from what I've seen, the overwhelming majority of users on both sides feels like they actually got solid value, especially if they came in with the right expectations of what the platform could deliver. If you're outside the US, or if you want to pull your money out after 6 months, neither is for you. But if you're in it for the long haul, these platforms seem to deliver, at least based on the customer reviews. But it's time to dig into the meat, the actual features of these programs, because this is where the decision really happens. Let's start with Arrived Homes, and we'll see what features it has and how it compares. So, what really stood out to me about this was their private credit fund. This isn't your typical rental property investment. So, with this fund, you're not investing in properties, you're investing in loans secured by real estate. That means you're earning money through interest payments, not rent. It felt a bit like stepping into the shoes of a bank, right? And I kind of liked that. Returns are generated from borrowers paying back these loans. And the portfolio spans across the US, so it's not tied to just one market. That kind of diversification gave me some peace of mind. It also made it feel like less hands-on of a version of hard money lending, and without any of the risk of lending to like a cousin who flips houses and then just hopes for the best, right? Then there's the single family residential fund. So this one invests in actual homes, and they plan to use leverage when the market just favors it. So yes, there's some risk here, but also the chance to amplify returns. So I really appreciated how they explained this. They admit that leverage can cut both ways, boosting your gains, but also boosting your losses. But they only plan to use it when long-term rates make sense. That kind of thoughtful strategy did make me feel like they weren't just guessing and that they did have a plan for it. One thing I worried about was what happens if like rent dries up or something breaks down. Arrived in bakes in a 2% cash reserve per property for surprises, and if that runs out, they cover shortfalls temporarily with loans from their corporate entity. That's big. No capital calls, no surprise bills. And even the tax side felt easy. You do get the benefit of depreciation, which helps reduce your taxable income, but they just factor it all in and send you a simple 1099 DIV. No K1s, no stress at tax time. And actually, yes, they are SEC regulated, which means that these aren't like Wild West deals. They've gone through the regulatory hoops to offer securities to non-accredited investors. That added a layer of trust and security that I felt I could rely on. Now, when I started using Fundrise, one of the first things I liked about it is how they pay you. You earn returns through two channels, dividends and appreciation. The dividends are quarterly cash payments from income-generating assets, but your total return also includes how much your shares grow in value. And I've seen steady growth even in a rocky market. They also have something called the Fundrise IPO. It lets you buy into their parent company directly, Rise Companies, directly through the platform itself. So not just properties, but ownership in the tech and management company itself. That's pretty unique, and honestly, I hadn't seen that anywhere else. So yeah, interesting. As for retirement planning, Fundrise lets you open either a Roth or traditional IRA directly on their platform. That actually saved me from just juggling multiple accounts all over the place, different apps, you get it. Just one login, one place, and it's all integrated. So let's say come tax season, you'll get a mix of 1099 DIVs, K1s, and 1099Bs depending on your investments. This is a bit more paperwork than Arrived has, but that is also the trade-off for the wider variety of funds. All right, another area where Fundrise stands out is with their investment plans. So you don't need to pick individual properties. You choose from 4 options: supplemental income, long-term growth, balanced investing, or venture capital. The platform spreads your investment across multiple funds automatically. That made it easy to match my money with my goals without, really overthinking it. So I could just choose how much money I wanted in each one depending on my risk tolerance and what I wanted to happen with it. So where's the edge here? If you want more control and insight into individual rental properties, Arrived feels more transparent and more specific about those individual properties. But if you're after big picture diversification and a hands-off experience, Fundrise is tough to beat. But then again, these platforms are not anywhere near perfect. Both of them do have some issues. I've spent time with both, and here's what I've seen. Arrived Homes does a lot right, but they're still expanding. That means you won't find hundreds of properties listed at any given time. Sometimes I had to wait for new offerings to drop, especially when I wanted to diversify more quickly. It's not a deal breaker, but if you want to deploy a large sum fast, you might feel a little limited. Now with Fundrise, the biggest gripe that I hear is liquidity. This platform is built for really long-term investors. If you want to pull your money out in 6 months, this isn't the platform for you. They do have quarterly redemption windows, but even those are subject to availability. But personally, this didn't bother me because I knew what I was signing up for. This is long-haul investing. It's not a trading app. It's more like setting money aside for future wealth I'm just leaving it alone for the really long term. It's not next month's rent. Now, when it comes to cost, both Arrived Homes and Fundrise, I would say, are reasonably priced, especially when you consider what they give you access to. Now, these aren't free apps, but they're also not nickel and diming you for every click on their platforms. I didn't feel gouged, and compared to the effort of doing all this on my own, like finding properties, vetting tenants, paying a manager, just having the money in there and having them do it, this just felt like a bargain. That said, pricing does change. There are also often just promos or limited time fee structures, so the best way to know what you'll pay and what discounts are live is to check the links in the description down below. And yes, we do try to keep those links up to date so you'll get the best deal. So here's the bottom line. Arrived Homes versus Fundrise isn't just about features, it's about fit. If you want direct property exposure, SEC-regulated offerings, and total simplicity, Arrived is probably your best bet. But if you're looking for long-term diversification, access to a wide range of funds, and even ownership in the platform itself, Fundrise has some serious appeal. Check the link in the description of this video to get started with our special discount and coupon.